Welcome back to Market Fatafat, where we are highlighting all the buzz encounters for you in this edition. And moving on then, Minnie, let's talk about Pidilite, because this time around not a great set by the company, and even the brokerages are not that bullish on this counter, because if you see firstly the numbers, then on the margin front there has been a decline of almost 400 basis points on a sequential basis, and 19.9% is what the company has reported. But talking about the brokerages, Goldman Sachs do maintain their buy rating with a target price of 2,850 rupees, which is very close to the current market price as well. But they're saying that they're surprised by the management commentaries on near-term demand softness. The strong double-digit volume growth continues for the company, but the rural growth has outpaced urban for the fourth straight quarter. Some of the other factors that they are highlighting. But talking of Macquarie, they maintain an underperform rating, and target is quite lower than the current market price at 2,300 rupees. They are saying that the Q4 EBITDA was below the street estimates. They are raising near-term demand concerns as well, and they believe that the higher brand investments aided the growth in other expenses. So all in all, not brokerages are bullish, and even the numbers were not impressive, and stock down more than 4%.
Okay, surely keeping an eye out on Pidilite. But let's move on to talk about another earnings candidate. We did have KC International that reported their numbers. Overall, when you're looking at it in terms for the revenue, what is coming in, an 11% growth in terms of the revenue of the company, but the EBITDA performance saw growth of 36%, while the margins of the company saw a slight bit of an increase coming in there. But other than that, when you're looking at it with, in comparison to what is, what the street was also anticipating, it is a bit of a weakness that versus what the street was anticipating. So let's keep an eye out on that. Quarter-on-quarter basis, when you look at it, KC International has remained quite flattish in terms of the margins. So yes, overall, let's keep an eye out on KC International. Nothing exciting that happening in the numbers, and nothing exciting that is happening in the stock price as well. It was quite a subduedness in terms of the numbers.
All right, that's about this counter, but moving on, and let's get you the latest on the Air India fiasco with flights cancellation on the back of the crew members taking mass sick leaves. The Aviation Ministry has now taken cognizance of the matter and has asked the airline to resolve issues and set things in place as per DGCA norms. Let's go across to Sumit Chaturvedi, who's tracking the story for us. Take it away, Sumit.
Well, there's a turbulence for a Tata Group-owned airline, this particular one, Air India Express. So far, around 85 flights have been cancelled or delayed. Issue is because of crew going on sick leave en masse. Well, the problems are many. April 26th, crew wrote a letter to Tata Sons chairman and Chandrasekaran detailing what problems they are facing, about the pay issue, about seniority, about the importance not given. But according to crew members, some of them have spoken unofficially. They have said that they have not, their overall demands were not paid heed to, and that's why they are going on such kind of mass sick leave. Now, Aviation Ministry has taken note of it. It has directed Air India Express to make sure that passengers do not face any inconvenience. Also, they should be provided facilities as per DGCA's norms. That's the directive to the airline. Also, it's coming a few days ago before the annual holiday season starts, especially during school holidays, school enter vacation. So that's why it's crucial for this Tata Group old airline to resolve issues as early as possible. In April, another group airline, Vistara, faced pilots issues, and then they had to attend or hold a town hall with pilots. Then issues were resolved. This time it's Air India Express. So clearly, one after the other, airlines, before going for merger of all the airlines, there are issues emerging, and crew members and pilots are coming one after the other, detailing their problems.
Okay, Sumit, thank you so much for that latest update that has come in over here, and that was for Air India Express in terms of the concerns. Pilots have taken sick leave, the cabin crew has taken sick leave, so yes, because of that, some issues around that. But let's move on and keep it going with some other stocks that are buzzing in trade, and in focus, Sonata Software. Ankita, this one has seen a sharp fall after its numbers. What were they looking like?
Software fell 14% in early trade today, and post its Q4 earnings, the company reported a 3% year-on-year drop in the net profits to 110 crores for the March quarter, as against a net profit of 113 crores on a year-on-year basis. The revenue from operations rose 14% to 2,191 crores in the last quarter. The board of the firm has also recommended a final dividend of 4.4 rupees per equity share. Additionally, the board of the firm has also cleared the merger of Encore IT Service Solutions Private Limited, which is a wholly owned subsidiary subsidiary of the company. With the company, it has accorded an in-principle approval for the merger of Encore Software Services Inc. USA with Sonata Software North America USA, also a wholly owned subsidiary. So another news flow coming in there, but for now the stock is declining in trade, down with cuts of almost 14% in trade now.
All right, but let's shift focus to Bharat Forge because the earnings have been decent, but the management commentary has been great. So let's go across and listen in from the management of Bharat Forge.
Promised to do. And this is in the second year after our acquisition. We acquired this business in July 22. The standalone business of Bharat Forge is doing well given the market conditions, and weakness is specific only to a certain segment of our industrial business, which is largely oil and gas. We have made initial breakthroughs in two new sunrise sectors, and we expect that these will become large growth sectors for us going forward, and these will continue to this will ramp up from next year, but will become meaningful by about 27. I want to credit our overall management team and especially the team in finance for managing our balance sheet extremely well. In spite of all the capex and investments that we have made in the last 5 years, our balance sheet is pristine, and it provides us with a lot of dry powder to take benefit of opportunities that may arise. I would now like to talk about some of our medium to long-term priorities. BFL has transitioned substantially over the last 5 to 6 years. We have been able to cushion the impact of potential cyclicities from any one business sector or more with new initiatives like defense, industrial castings having a large business accruing. In the future, the EV business also will provide such a growth opportunity and further accelerate the growth of the business. The aerospace business is now on the cusp of a major takeoff and on a solid growth trajectory, which will continue to see momentum in the next year as well. JS Auto closed FY24 with a revenue of 567 crores and an EBITDA margin in Q4 crossing 16.5%. This business will double over the next 4 years, probably double or more than double over the next 4 years, and we are working on a number of new initiatives around more value addition, operational efficiencies, and capacity expansion, including NPD, which will translate into stronger numbers for both the bottom and the top line going forward. This business, just to tell you, has grown 30% YOY 2 years continuously and will continue to grow in a strong manner. On the overseas front, as Kedar mentioned, achieving profitability and stable operations of our aluminum business remains topmost priority of the leadership. Our European aluminum operations are already in the black, while the US business will progress towards operational stability in the next 2 quarters. We are very confident that for the full year of 25, in the fourth quarter, we will see extremely strong performance from our global subsidiaries. The aluminum business continues to see robust demand with growth driven entirely by drivetrain agnostic components, so we are not at any risk from any potential slowdown in passenger car EV, which is something that is a cloud hanging over a lot of supply base globally. The defense business has also clocked a strong revenue of 1,561 crores this fiscal, with execution for all our export orders progressing on schedule. More than 80% of this revenue is export. The defense business will move entirely into the 100% owned subsidiary, KSSL, in 25 once their new facilities are fully commissioned and the licenses get transferred to those physical facilities. This will involve transfer of manpower and customer contracts from Bharat Forge to KSSL. While it will not affect the consolidated results, there will be some change in the standalone earnings as this transition plays out. Some of our investments, such as JSA, have borne fruits, while the progress on e-mobility is beginning to show a lot of promise and is moving in the right direction. FY25 will see a lot of progress and growth in the e-mobility vertical as well. I'm confident that given the multiple growth engines, we should see a strong growth for 25 and our ROC to incrementally keep growing and cross the 20% mark in the next 2 years. I'm now happy to take your questions, and me and our team here will try to explain to the best of our abilities.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press.
Welcome back to Market Fatafat on ET now, and let's keep it going with all the buzzing counters, and let's welcome on board our technical expert for now, that is Sneha Seth is joining us on the technical side. Hi, very good afternoon, Sneha, and let's talk about the first counter that you have picked, that is Tata Communications. Tell us how the chart's looking like for this one.
Good afternoon. If we look at Tata Communications, this counter has corrected recently and it has been consolidating from quite some time. Today we have seen some buying interest. It is nearly up by 2% today. There is a trendline support from there only, that counter has been recovering. So I believe we may see some further strength. So this counter should be on the watch list, and the risk reward ratio at current level is quite good. So with a strict stop loss of around say 17.07, someone who wish to go long can take a long trade, and the target expected will be around 1837 for now.
Okay, keep an eye out on those levels for Tata Communication. Let's move on. Snehi, Protein eager, that's in focus on the back of its numbers.
Any bad set of numbers coming in, rather poor performance for quarter 4. Now Protein e-Government's quarter 4 FY24 net profit has fallen 39% on a year-on-year basis to just 19 crore rupees. Revenue from operations has also slipped 4% year-on-year to 222 crore versus 232 crore in the same quarter last year. EBITDA adjusted for doubtful debt has fallen 8% year-on-year to 48 crore rupees, and net profit, like we spoke about, stood at 97 crore in FY24, which is down 9% versus FY23. Margins have also contracted to 20.6% versus 22.6% in FY23, and the board has also approved a final dividend of 10 rupees per share. But on the back of a rather poor set of numbers coming in for quarter 4, the stock is down almost 3% as we speak.
Right, that's about Protein eager. But Sneha, let's talk about IDFC Bank. All these private banking names are not doing much today, but are you expecting a good move in IDFC Bank anytime soon?
If you look at the chart structure of IDFC Bank, this counter has been trading in a range of like 1420, 1425 on the lower side, and on the higher side the resistance is around 1580. So this is the range. Looking at the recent fall and the overall chart structure for banking index as well, I think there are chances that IDFC Bank can correct below the support zone. So again, this should be on the watch list. Any correction below say 1420 would lead this counter to further selling pressure towards say 1440, 1445 odd zone. So this counter, any close below 1420, this counter is a sell for me. And on the higher side, one can keep a strict stop loss of around say 1479 for now.
Surely keeping an eye out over there for the stock. But let's move on, talk about Max Financials. That's in focus after we have a brokerage growth that's come from UBS. When you look at what UBS is saying, they're maintaining their buy rating target price of around 1,270 rupees per share. The APE that the company has seen in terms of a growth was 19.2% YOY, while in terms of the VNB also they saw 1.2% growth in FY24, which surprised quite positively in Q4. So yes, that is what is keeping them on the positive side. Distribution channel, proprietary channel, that is something that has driven the growth in FY24. So yes, for Max Financials, UBS continues to maintain their rating. Let's keep an eye out on the stock today, trading almost just with gains of 0.6% in trade, given up those morning highs that we saw for the stock.
All right, moving on then, and Sneha, take us through the charts and the technical pattern for Siemens then.
If you look at the chart structure, it is very good. This counter has been continuously taking support near the 20 DEMA. On a daily chart, if any counter trades about 20 DEMA, it is said to be very good. And so is the case with Siemens. Today, it is up nearly 3.5%. It's making a new record high. And I think the chart structure looks quite good. Someone who's already holding this counter should continue to hold this counter. I believe we can expect 6,500 plus levels anytime soon. So this counter, if someone is already holding, should maintain with their position.
should maintain with their position if someone is already holding Siemens. But let's move on, talk about VOLAS. Ankita, this one clearly under pressure after its numbers.
VOLAS shares, in fact, nosedived 8% in early trade, after its net profit for the quarter ended March skidded 19% on a year-on-year basis. It reported 19% decline in the consolidated net profit at 116 crores for the quarter, down from 144 crores on a year-on-year basis. However, the consolidated revenue from operations rose 42% to 4,200 crore rupees in quarter 4 of FY24. The EBITDA margin came in at 4.5%, lower by 280 basis points on a year-on-year basis. Well, despite the miss in profits and margins, VOLAS' UCP, or the unitary cooling products business, continued to outperform the market. And a couple of brokerage notes that came out on VOLAS were by Investec, that is maintaining a hold with a target price of 1,100 rupees. Macquarie on VOLAS is maintaining a neutral with a target price of 842 rupees, and Morgan Stanley is maintaining an equal weight with a target price of 1,160 rupees per share on VOLAS. But currently the stock is down and out, trading with cuts of 5%.
That's VOLAS for y'all, and let's not forget, it was the 9th consecutive quarter that the EBITDA margins underperformed what the street was expecting. So clearly, that pressure comes in for VOLAS over there. Intraday it was down as much as the lowest level since May 2022. Moving on, Patel Engineering. Snehi, what is the news for here today?
Positive news flow coming in for Patel Engineering today, and the stock price is also doing pretty well, up 2.5%. Now, the company, along with its joint venture, has been declared as the lowest bidder from Office of the Executive Engineer, Government of Maharashtra, for the irrigation project worth 343 crore rupees. Irrigation project includes the work involving construction of water lifting arrangement work for first stage from the submergence of the Jigao project, including the civil, mechanical, electrical components as well as allied works. Now, the said project is located in the state of Maharashtra. It's to be executed via a joint venture, out of which Patel Engineering's share is 35%. And this comes up to roughly 120 crore rupees in terms of revenue as well. The project is to be completed over a span of 24 months. So on the back of this positive news flow of the JV bagging in order, the stock is doing pretty well, up 2.5%.
All right, that's about Patel Engineering. But moving on, in Sneha, let's talk about Power Grid. How are you looking at this stock then?
If you look at this counter, it is up nearly 2% today. There was some profit taking from the higher levels, but if you see, 20 Dema has played a very important role in today's session. We are seeing buying interest from that support zone only. So previous swing high resistance was around 295, around same level only. We saw index this counter correcting, and now we are seeing some buying coming in. So I think if someone for a very short term perspective, someone wants to go ahead and long this counter with a strict stop loss of today's low, that is 292, one can go long. Target expected will be around 317.
Keep an eye out on those levels for Power Grid over there. But with that, we're absolutely out of time on this edition of Market Fatafat. So thank you so much, Sneha, Snehi, Ankita, for joining in with us on the show and talking to us about all the stocks that have been buzzing in trade, as well as Dhwani for earlier joining in with us. But with that, it's a goodbye from Shrishti, myself, as well as the team who put the show together.
If you like this video, then like, share and subscribe to ET Now.